All right. My name is Chris Campbell. I'm a CPA and I work with small businesses and individuals to help them pay the least amount of taxes possible while keeping them out of jail. So today I wanted to talk about the importance of a particular financial when looking at the health of your company or to find out the health of any particular company you might be looking to get involved with. The primary two financial statements you hear about are your profit and loss statement, which is also known as an income statement, and the balance sheet. So those are usually the two main financial statements that consider or look at determine the health of companies. So the income statement or profit or loss statement tells you how much money they put in over a particular period of time versus how much expenses that you paid over a period of time, and you figure out what the net profit is from that statement. And then the balance sheet really just lists your assets within the company. So cash, big ticket items, debt, your liability, what you owe, and then the difference is your equity, right? What's left in the go. So that's pretty much how those two financial statements work. But if you want to look into the health of a particular company, one statement that I think is very important that I think sometimes is often overlooked, and that is what's called the statement of cash flows. And the reason why that's important is because it really drills down and what the actual cash in and out of a business really look like. Because as we all know, don't have cash, very hard to operate as a company if you don't have cash, right? So what this statement of cash flow does is a particular period of time, and it lets you know how much cash actually came in or out of business over that. Most may think, oh, we have our profit and loss statement, so we can know how much money we've made over the period of time. However, that can be a bit deceiving just looking at a profit and loss statement. The way that reporting purposes work, there's some things that it may not necessarily tell the whole story as far as the particular health of the company. The reason being is the way that you can record revenues. If you're looking at a financial statement and it's in an accrual basis, one tricky thing is that with the accrual basis, when you have financial reporting and you're looking at an income statement, is that you can record income on your books without actually having to receive the money. So perform the services and you bill them later for it. That income does get reported on the books, even though you had not received the money. So even though you didn't receive the money yet, you still report it on your books as income. So if you're looking at an accrual-based statement, you can look and say, oh, you made all this money. This is great. But it may not say how much of it you might have actually received. You might not have received all of it. So that's where a statement of cash flows comes in, because at that point, you can really look and see where the actual cash came in, how much cash actually came in or out. So now, if you look at a profit and loss statement with a cash basis, that might be more accurate as far as showing the actual cash that came in and out. But if you're in a situation where you don't have access to a cash basis profit and loss statement, or you're just not sure, then you may just want to look at the statement of cash flows, because the statement of cash flows can tell a story about, well, you may have a situation where you have a number of sales, you're making sales, but you may not be collecting the money, which could be a big problem, right? Because you're spending the money and the resources to perform the service and provide the service or item and not receive the money. If you have enough of that, what they call accounts receivable, if you have enough of that where you're performing the services and not getting paid for them, yeah, that can be signs of an unhealthy company. So that's the biggest thing where things might be a bit deceptive if you're looking at an accrual basis, profit and loss statement. And with most financial reporting, that's the format that it's in. So the rule of thumb here is you're looking at a profit and loss statement and you really want to get a good sense of what the actual cash is looking like. Make sure you ask for a cash basis profit and loss statement. And if you can't, or you're not sure, then make sure that you just get a statement of cash flows. And that'll truly show the cash activity within that particular business. So just a quick pointer there. And that's something that maybe you can look out for in your own business. So it can be a good indicator of how things are looking on the collection side if you operate such a business that collects. All right. So that's all for now. If you have any more questions about this topic or any other tax or account related issue, feel free to reach out.